Let's bring in Kevin Green, senior markets correspondent, to help get us set up for today. KG, so yesterday we got the first of hopefully many to come of trade deals. Now, look, some consider this low-hanging fruit, but you do go for the low-hanging fruit. Why don't you recap kind of where it stands between the U.S. and U.K.?
Yeah, yesterday's trade framework, we'll call it here, it doesn't seem like it's an actual deal. And a UK official did actually mention that yesterday, about 10 minutes before the close, and that's why we saw that sell-off going into the close here. But there's a structure of a deal that's taking place right now, especially when you're looking at the automotive sector as well as steel. And then we'll talk about Boeing here in a second. But overall, it's a decent win for the Trump administration, at least to kick off maybe some of these other trade negotiations that are taking place. And it looks like for the UK, this structure or this framework is not really done yet. We probably will see additional deals being done over the next couple of months or even years for that matter here. And the market was actually fairly enthusiastic about that. Once again, when you had the going into the close, you had a UK official kind of, watered it down a tad bit here. But overall, I think the administration definitely got their photo op. They got a win. And let's see what other deals actually transpire here. I mean, we're still really focusing on the EU, Japan, and China. Those are going to be the big three that really impact us from a trade standpoint.
Okay, and we'll get to China in a little bit because I know, there are some developments that we're watching there with regard to commentary there. But let's talk a little bit about the framework of a deal, or essentially kind of the blueprint when it comes to, and obviously, they gave some indications that this is a blueprint. It's the reciprocal, the 10% stays in place, right? For autos, though, the first 100,000 vehicles enter at the 10% rate, and then volume beyond that is subject to 25%. How do we interpret that from investor perspective, KG?
Well, President Trump is really not too concerned about the UK automotive industry just in general. And so that's probably why you're seeing a little bit more leeway when it comes to that policy just in general, right? I mean, the majority of the cars here in the United States are from the big three. And obviously you're seeing like Tesla and things of that nature. But the Trump is not really too concerned about the UK autos. And that's because a lot of them are very high end that come here in the United States, right? So it's only going to impact a very small segment of buyers here. So I think that's one of those signals. When you're looking at the steel side of the equation, the UK does produce a decent amount of steel. It's not like the #1 product that they export, but they do have an industry that has been drawn down over the last two decades or so, and it seems like they want to restart that industry. And I think that also kind of lends credence to the steel needs that we have here in the United States. Pretty much all metals for the most part. So once again, it's a decent framework. It has been something that's been in the works for years now. It seems like now President Trump and the UK, advisor, if you will, leader is actually, trying to make something come to fruition, make it formalized.
Okay, let's talk a little bit about China because the Treasury Secretary and the U.S. Trade Rep gearing up to head to Switzerland to kick off some talks with China. We're just seeing this morning President Trump posting on Truth Social about China, saying they should open up the market to the U.S. And just a mention of an 80% tariff on China. What's your takeaway from that?
Yeah, I mean, obviously, he's probably trying to throw the China representatives off their game here a little bit, maybe showing that he is open to having an adjustment when it comes to tariffs. But also in those tweets or those Truth Social posts, he said that it's up to Scott Bassett. And that's why we probably saw, a sell-off about maybe 30 minutes ago. But we did see a little bit more of a recovery because the market, for the most part, thinks that Scott Bassett is a reasonable negotiator here. And maybe that 80% level is going to be that high mark. And maybe we see that actually coming down a little bit lower here. But overall, once again, he kind of talked about opening these markets up. We do have these trade talks over the weekend. I think you set a very low bar if you're the White House, and I think the market's probably setting a very low bar when it comes to these negotiations in general. Because it probably will take a fair amount of time. So there's a lot that's still in the works. I will say, though, Diane, if you kind of look at that 80% number, let's say that is going to be true, that's still effectively an embargo on China goods. It still would cause a pretty significant problem when it comes to trade just in general. So the market, I think, is probably betting on the hopes that number is going to come down significantly over the next couple of weeks, and hopefully the weekend meeting is going to be the kickoff of those negotiations.
Okay. I want to pivot a little bit and go to Boeing. Shares a little bit higher in the pre-market. And this seems like this was a win out of this trade deal with some jets on order from British Airways parent company. Tell us some of the details here, KG.
Yeah, so IAG, or the International Airlines Group, did put in an order for Boeing jets here, 32 Boeing 787-10 Dreamliners, and then also they put in an order for 21 Airbus A330 to 900 Neos as well here. So they have the option to buy 10 more of the Boeing 787s. And this is why we are seeing a decent little pop here when it comes to Boeing over for the pre-market here. Now, we know that production issues has been a problem for Boeing, but they are hoping that the FAA is going to kind of relax maybe some of these restrictions, increase some of their production, and then they're going to be able to deliver more planes on a monthly basis, which will obviously then drive revenue here. So this is a win. I'm not sure if these orders would happen without this framework of a deal, but this is a win for Boeing here. And I think when you kind of look at these orders, a lot of them are supposed to be delivered between 2028 and 2033. We'll keep an eye out on these earnings calls. We have seen Boeing actually push back a lot of the delivery dates because of these production issues. But right now, that's the tentative date.
Yeah, but look, and to be fair, KG, I'm looking at a chart for Boeing. It has outperformed the S&P 500 year to date, so it certainly seems like this year may potentially be the year that Boeing turns the corner, considering the issues it's been plagued with for several years now.
Yeah, when you look at the chart, it really was trading and disconnected compared to the fundamentals of the company. I mean, it was trading at a very steep discount if you're looking at the forward multiple, 12-month forward multiple here. So the market is buying this up because they do see some perceived value here. And Boeing continues to receive orders. You know, even take this deal out of it, they continue to get orders from overseas. If you're looking at Saudi Arabia or maybe some of these other Middle Eastern countries, there's still a backlog that is building up here. They just need to be able to produce and deliver in order to realize that revenue. From a technical standpoint, it is attempting a breakout right now. You want to see a breakout above that $200 level. That would actually probably unleash or unlock a fair amount of investors really looking at this name, but it has been able to recover. We just don't need any bad news from Boeing. And over the last month or 2 months, we've seen a lot more good news coming from this company rather than bad.
Yeah, it doesn't need any bad news. Let's talk about a big mover today. The trade desk shares rallying double digits right now off the back of its latest earnings. Can you recap some of the numbers, KG?
Yeah, you're seeing a nice move to the upside here. Very low bar going into this report, but the trade desk actually did report revenue at $616 million here. Street was looking for $575 million. That's around a 25% increase on a year-over-year basis. And the adjusted earnings per share came in at around 33 cents. Street was looking for 25 cents, so they beat their top bottom line. Adjusted EBITDA also beat with a 41% increase on a year-over-year compared to the estimate there for adjusted EBITDA. And you are seeing margin improvement. Now, this is completely different than what we saw from last quarter, which really drew the stock to the downside here. But maybe they have seen a little bit of a floor, demand starting to ramp back up here. Maybe the bottom is not falling out, and then the ad space just in general is holding steady. So you are seeing some buyers really stepping in. And this was a stock that also saw a significant amount of short interest. So this might also be a squeeze taking place. But this is actually a really good report for them. The outlook overall was actually really good when you're looking at the fiscal year guidance. Both beat the street's expectations. And that's why we're seeing the stock making a meaningful move here in the pre-market.
Okay. And then, so again, we're seeing the stock make a move in the pre-market. Where does the trade desk go from here in terms of, you mentioned the low bar came into, it's been down sharply the year to date. I mean, down more than 40% this year. Is it turning a corner based on these recent results?
It is. So before the report, if you actually look at the volume for the trade desk yesterday, it was one of the largest volume days that we've seen. Actually, probably the largest volume day that we've seen close to all year. We had one day that was actually better than this one, and that was actually that major down day where it lost about $40 in price here. But it is testing a little bit of a neckline from a technical standpoint here. If it can open up above that 62.25 area, maybe some buyers do step in once again and try to ramp this stock up. And then the next area of resistance is going to be sitting at around that $85, $86 level here. So it's trying to base out and break out, and if they continue to report good fundamentals here, that could be the reason and the catalyst for the price advance here over the next couple of weeks and months.
And then your levels on the S&P 500, 5663, where we finished yesterday, 5700 to the upside, or what's your target that you're watching out for to the upside and the downside?
Yeah, so the upside still looking at 5730, and then to the downside 5600. There's some flows below that level, but we have seen, obviously buyers like really stepping in after that news. So usually on Fridays we do see volatility being crushed, meaning vol moves to the downside. That should actually be conducive for equities moving higher here. But we're trading on news flow, so the options flow say one thing, and we'll see what the administration comes out with in order to try to either give us more enthusiasm to the upside, or if we see any type of disappointing headlines.
I suppose it depends on what happens on Truth Social or Twitter X. Certainly continues to be a headline-driven market. All right, that's our Kevin Green, Senior Markets Correspondent. Thanks, KG.